What's up, YouTube? We back with another video, and today we in a different location. We in Charlotte for this one. This one is on my birthday, so the work don't stop. So let's get right into the plays that we're in. Oh, let me go back. My bad. So this is how the S&P has been performing on the year to date so far. So it's the same story. Tech has been running amok. Um, you see healthcare doing pretty good, energy. So understanding what sectors are being the ones that's performing helps you when you know what plays you want to get into, because you don't want to be, say, if you're trying to win a championship, 9 times out of 10, you want to put yourself in a position with a great team to succeed to get there. So going against the grain and saying like, "Oh, I'm gonna go for Charlotte to win a championship next year," you wouldn't do that, because why? They have been performing as such. You want to get in the place that's been, you want to get on places, stocks that's been winning, stocks that's being rewarded for what's going on. And right now, tech, um, AI, all that type of stuff, the infrastructure, the energy, all that stuff is being rewarded right now, because that's where people are spending, businesses are spending their money. So they're going to spend their money with other businesses, and all that's going to do is continue to boost the stock performance for all those companies. So let's move on and just see how everything was looking for year to date. We can see last week was a bloody week, and we got out of we exited some plays because it was bloody, but this is supposed to happen. It's not just gonna run up and never fall down. It's a saying that stocks take the stairs up and the elevator down. So they're gonna go up and they're gonna go up. They're gonna gradually work their way up, but then when they fall, they're gonna take the elevator down. You can see Nvidia drop uh 9% in the past week. AVGO 11%. So the companies that's been being rewarded all year, they kind of took a hit over the past week. But this is where we look for good entries. This is not where we shy away, or let the market scare us away. This is actually where we look for our entries on the plays that we want to get in. We find in the next levels of support, or previous resistance that we can get entries on. So did- we exited 4 plays last week. Google definitely hit that stop loss in that range of 30 to 40%, where we go ahead and exit a play. But the other plays, even though they didn't hit those thresholds, I seen the weakness just looking at the technicals. And I don't want you to think that when you get in a play, just because you have your thesis on it, that it has to either win or it has to either hit your stop. No, like if you start to see weakness on your play, then it's going against the grain, and go ahead and cut it. Don't feel so obligated to wait to that, 30%. But as long as it's starting to break the rules of, or show the signs that it's going to go against you. So let's just get right into it. Oh, and any plays. I'm not in any plays right now. So just to show y'all. So yeah, we're not in no plays right now. We just took out of those last 4 plays that we were in. We exited those, so now we don't have any plays right now, but we do got some on the watch list that we're gonna look for entries in this next week. So moving along. So Google hit that stop loss on this day is when I exited that blue line. And if we look at Google, it broke that area of support. So it had a gap down this day, and it fell all the way to this level, but eventually strength brought it. The buyer stepped in and brought it all the way back to close exactly right above our previous resistance, our key level that we paid attention to. And you can see also the last time it did that here, it fell to this level and they brought it back up that same time. So what do we see to exit this play? Well, of course it hit our area to our percentage to exit, but also if you see on this day when we exited, it had a gap down and open here all the way below our level, and that's that another fib level. So did I seen when I seen that, I went ahead and exited the play. Of course, it hit that 35% as well. So it was no reason to try to stay and see what happens. If it continues to respect one of these levels, like up in here, and respect this fib level, hey, maybe we can get back into the play. So don't be afraid to cut something just because you're gonna hope that it comes back to your thesis. So that one went against us. And for this Apple play, we can see here that Apple, so I exited it on this day before it had this huge fall off because they got to raise their prices because, like I said, AI is winning right now, and companies need memory, and that's a company Micron where they put the memory for the iPhones and just Apple's products in general. They got to raise their prices because they have so much demand that they have to raise their price. So now that's affecting a company like Apple, and they have to raise their prices. So when the market got that news, it fell off crazy. So, but I didn't. Hey, we avoided that fall off. Not to say it will never happen, because sometimes you want to be in a play. We could have still been in this fall off, but I seen I seen all this weakness once it came to this area, and if you can see, I have that blue line marked out. It was taking the stairs up. It was going up, but it was like consolidating in a sense, going up. And then it came once it came to this area, this gray area that I boxed out. It had four wicks in there, and if you just look on the hourly chart, how that looks, you can see that it's ranging in that area. You can see it came and take the stairs up, took the stairs up, and then started ranging in this area. And so when I seen that, but on the day that I exited at the end of the day, I seen that it eventually broke outside of that range with that doji or with that wick. I'm sorry, that's not a doji, but with that wick that's indicating weakness on the upside, I went ahead and exited the play. Not because I'm smarter than the system or nothing like that. I just seen that strength. It couldn't continue on this path towards the top. And this is a doji right here that's already represent indecision. So I was already on alert for the play. And you can see every time it came to this level, the sellers just kept pushing it back down, kept pushing it back down. It didn't have any strength at this level. So that's why I went ahead and exited that. Um, Same thing for Walmart. Really, we got in here, but it's been ranging in this area this whole time. So it can range in a big area, but you can see all these, none of these are really strong candles. They're all really indecisive candles. Like it was no bullish momentum in the Walmart play. So we went ahead and exited that. And then the ANET play. Like I said, I started seeing this indecision. It couldn't make a new high when it came back to this level at the blue line, so it kept having lower highs. So we went ahead and exited that. So that's nice, short and sweet. The only play that I've been really keeping my eye on right now is TSM because every time TSM goes and makes a new high, it always comes back and tests that level, and you can just see throughout this whole thing. Every time TSM makes a new high, it's taking the stairs up. It made a new high here and it held that level for a long time. Eventually it broke it, but that's what it did. It came back to test that level, came back to test that level, and made a new high here. Okay, if it fell back down and tested that level again, broke it, had some weakness right there, broke it, came back to test the level. So what do we see typically? TSM makes new highs and they come back to test the level, come back to test the level. So we want to see it hold up this 50, hold up this level, and we can get into play. This candlestick is kind of representing that okay, buyers brought it back up to a nice little close here. It's a it's a good green bullish candle. Not super strong, but it has strong volume though. So TSM, look for a TSM play for us to enter into this week. And if you're here for if this your first time, if you've been tapping in regularly, either way, I appreciate it. I want to just document this whole journey of me building up this option portfolio. So like I say every time, I'm not just a master of the financial markets by any sorts or nothing like that, but I do have an understanding, and I do want that accountability and maybe meet more like-minded people. It's crazy because um it's like sometimes we do stuff, but we don't really publicize it. We don't really. People ask me like, "Hey, bro, what you been doing?" I'm like working on my option, working on my content stuff. So those are the type of conversations I can have more and more of. Like, oh, have you checked this person out, or have you, what's your style? How do you do it? Stuff like that that makes you hone in and network in a different way with more people that's on the same journey too. So if you hear what um for any reason, maybe you don't even do options. It's just cool to watch somebody do the journey. I appreciate it, and I'll catch y'all in the next one.